Test. Hi traders, Jeffrey back with you. Glad to see all of you were able to join. Before we get started, let me just, if someone would jot in the chat room if you can hear me all right, just let me know if the sound is good. Perfect. Before we get started, thanks to my friends over at Financial Juice, Amar, and the whole team, and especially to Drew, who manages all of the back end and the tech stuff here. So today, we're going to expand a little bit on what I do, the kind of Forex trading that I do, which really is made up of three different. Rodney, hey, how are you? Really made up of three different kinds of signals. Many of you are already in my Telegram private room, and you get evening signals that are based on currency strength that I project over the next 6 to 12 hours. Today, we're going to go into live trading that I do based on the economic reports that are coming out. That I'll begin to start putting in the Telegram room as well, the ones that I look out for and the ones that I trade. And then starting on Thursday, I'll also introduce live signals as I see them occurring during the day. But before we get started, as always, all the information provided here is for educational purposes only and is not an offer or a recommendation to trade futures, stocks, options, or Forex. So here's what we're going to cover today. I'm going to review what I call parabolic price action and the trading that I do around the release of news reports. Is on a 5-minute entry and trade action chart. Hang on one sec, okay. And then I'll show you the indicators that I use, how I set up my charts, the strategy that I'm using, what market moving news I'm paying attention to, how I release that and let everybody in my group know about it. And then we'll show you some trades that I took last week, which was a little bit of a slower week because of the Thanksgiving holiday, but nevertheless, some great trades there. So, as many of you know already, I follow Forex specifically because of the predictable price action movement, okay? This parabolic price movement, and parabolic meaning anything that is projectile-like, going up, swinging back down, and coming back up, is very predictable and can be traded very easily to give you that edge that you're looking for, okay? So this is an ideal parabolic chart. This is just a sample chart, and you can see price moves from one end to the other and back. How do we determine exactly which pairs, which instruments to trade? Over the years, I have followed and looked at all of the different instruments, and for me, the major and minor currency pairs, these are just the majors, but I follow all 28 major and minor pairs throughout the day and the early evening. Or you can follow currency futures just the same, and even gold and oil. They all demonstrate very nice parabolic moves, okay? Equities do not, indexes do not, but these always follow a nice, smooth, parabolic fashion. Why? Typically, it's because the amount of Forex that is traded is so massive, okay? It dwarfs all of the indexes. It dwarfs all of the equities. It is fueled by major institutional trades, and they run it up, and then they run it back down, okay? The key is to be able to have the right indicators to be able to look and see when we're at an extreme and ready to swing back around. And that's what I'm going to show you. So this is my 5-minute parabolic entry chart. As you can see, price moved all the way up to this extreme and then ultimately down to this extreme. This is a little stretched out. Sometimes it has a very nice movement right off the bat. Sometimes it just hovers around the midline a little bit. But that's what we're looking for, okay? I'm doubling up the channel that we're looking for extremes. And if you'll see here, we've got two indicators that will show us extremes of candles. One is the Nadaraya-Watson envelope. That's the green and the red envelope. When candles are approaching or especially outside of the envelope, that is an extreme candle. We call that an outside bar or an outside candle. And then these channels here I find very useful as well, okay? This is a linear regression line and the standard deviation channels on either side, okay? I often use this midline to take a first target, especially if I'm getting in close to the outside edge, okay? Or use it to pinpoint additional targets as well. Now, when we have a signal, a candle outside of both, outside of the linear regression outside of the standard deviation channels, outside of the Nadaraya-Watson channels, this is a great outside bar. Plus, if we also have a reversal off of a supplier demand zone, okay, just like this demand zone here, and we're also oversold, and we're coming out of the Williams percent R channel on the bottom, you can bet that this is going to be moving up and very likely super high probability all the way up to the other end of the channel. In this particular case, I would get in when we see the reversal candle. So I'm not just going to get in when I see an outside bar or a signal. I'm going to wait for the reversal. And I'm going to get in when that reversal closes on the opposite side of this linear regression moving average. Oh, sorry about that. Okay, this is a 14-period linear regression moving average. So in this particular case, I would have gotten right over here. I would have taken my first profit either at the midline, but because I kind of got in a little bit past, I might have looked for the next standard deviation line and even the following one for a second or third target. Okay, so just to review what else is on here, I like to use Heikin-Ashi candles. That helps visualize the trend very nicely. The Nadaraya-Watson envelope is one channel that I use. The Nadaraya-Watson also has an estimator. That's this midline, which is a very nice judge of the trend. It gives you a good handle on whether or not you've been in a trend for a long time, because sometimes you're looking for the reversal of that trend, and that's going to be confluence when that red turns to green and you're in a long. That gives you extra confidence to stay in your trades, okay? Supply and demand zones, I always put on my charts because I like to trade off of them. Linear regression moving average, as I mentioned, I'm using that to place my entry. And then for overbought and oversold, stochastics, RSI, or just stochastics, all of these are free indicators. Everyone in my group gets a link to my G drive, and you are able to download the indicators so you don't have to go hunting around for them. And lastly, if you're in a trade and you've got time to watch it, I like to use the Williams percent R to really watch when I'm in a super high momentum channel, because when you're in the lower channel, then your shorts are continuing. When you're in the upper channel, your longs are continuing. Let's get into a little bit more detail on the entries. So here's how I enter on news event releases, okay? As I said, this is a 5-minute entry chart. I'm going to be watching the 5-minute chart for entry signals both before and after a news event, okay? It is not unusual for banks to run up or run down the price just before an event so that they can maximize a huge profit volatility candle right when the news comes out. How great is it then to be able to get in just before the reversal, as everybody has watched a chart when news comes out? You know, sometimes those candles shoot up or shoot down, and you say, gee, I wish I was in 5 minutes before. This is how we do it, okay? So in this particular case, if you look at this chart, right down here, if the news event is coming out a little bit later on, you know, let's say it's a 10:30 news event right over here, you may be getting in or ready to get in as soon as this candle closes and run it all the way back up. So we're monitoring the chart for entry signals before and just after the news event. And I'm going to show you how this plays out live. in a little bit. Then we want that candle to be an outside candle, an outside bar, and even look for the indicator to give us a signal, okay? Sometimes I will take the trade even if there's no signal, because the signal really only appears when there's a close of the candle. And you can see there's just a tiny bit of this candle that closed outside. But if the wick comes all the way down and touches a supply or demand zone and then reverses, there may not be a signal if it's only the wick that's outside, but that's still an indication for me of an extreme or outside bar. So I'm going to use that anyway, especially if everything else is in line. Okay, if I'm oversold and I'm coming out of the channel, and I've got a zone right over here that that wick faded or bounced off of, I absolutely will look to take that trade. And as I said, I'm going to wait to enter until I see the reversal candle. And sometimes it's a big reversal candle if you're just looking at the news, the candle before the news came out. So you may want to kind of front run that a little bit. But if it's several minutes before or a couple of candles before, you can absolutely jump in before. Some people switch to a 2 or 3 minute chart, or even a 1 minute chart just beforehand as they're counting down. Either works. They all are the same concept. But we want to see the reversal because this outside bar easily could have given another outside bar and another one and another one, another one, okay? We don't want to get in and then still watch price continue on the trend. We are looking for ways to predict the reversal. So we're getting in on the candle reversal when it closes on the opposite side of the linear regression moving average. For example, on this short up here, if we got into this one, we weren't quite outside, but it still was off of this supply zone. We wouldn't have gotten in on this candle, but we would have gotten in right on, let me make sure that you guys can see, right on this candle right over there, okay? Just when it closed, and then rode it all the way down, okay? Now, where is my stop usually? Let's use an example. I will always try to place my stop behind a zone or 2 zones back, okay? So these trades are pretty tight stop trades. So in this case, if I'm going long and I entered over here, I'm going to put my stop down here below this probably second demand zone, okay? So ideally, it's better to get in closer to the outside edge, but you don't always have that option, okay? You might pass on a particular trade if the stop is too great, okay? You certainly could get a big volatile candle, shoots up, shoots down, and then continues down in the direction of the original trend. So you definitely have to understand your risk tolerance and take the trade that works best for you stop-wise. But I'll always put my stop on the other side. For example, on this particular trade here, if I got in on this candle here, I might put my stop on the other side of this zone, maybe about halfway between the two, and that played out beautifully, and that was just estimating, maybe a 2-pip stop there. Okay, now what about targets? If I'm getting in, my first target, if I'm close to the outside edge, my first target will always be the midline, okay, or close to it. And then if I'm trading 2 contracts, two targets, I will put my second one either at the next standard deviation channel or the final one, okay? I only use 2 channels. But I also will look to see if there are any supply or demand zones as well, okay? So for example, if I'm in this long over here, I've got my stop down here, my first target over here, or if I got in after this candle closed right over here, that's pretty close, so I might go for this next standard deviation line to get in, or even the inside of this supply zone, okay? Those are high probability exits. You pretty much know that the zone is going to be a magnet for price, and it may reverse right off of the inside edge. It may work its way all the way through as it did previously to the outside of the zone, but it's a good probability that you're going to get right to it and reverse someplace right below or inside of the zone. And if the zone gets breached, then we're off to the races and continuing further up. So those are the different targets, and it is by feel. You'll get a sense after trying these different targets for a while what works best for you. I use a combination of the standard deviation lines and the zones to pick my targets, and I will watch price action and move my target. If I'm getting close and I'm deeply, or if it's a long and I'm already deeply into the upper Williams channel, I may push my target out and just pull my stop up and try to trail that way. Okay. Alrighty, let us move on. Okay, so here is an example of the economic calendar that I looked at last week. Okay, as you can see, these are only high impact. I want to see a lot of movement. There are one or two medium impact reports that I pay attention to, like some manufacturing that just doesn't come up on some as high impact. But for the most part, I will filter my news based on high impact, okay? And then from experience, we know which events for sure are going to cause a lot of movement in the pairs, okay? U.S. consumer, all U.S. inflation data, okay, and a lot of other major currency inflation data will always move the markets. U.S. last week, we had consumer confidence, okay? We had CPI from Australia, but that was at 7:30 p.m. when the Asian markets were just about to open. Tokyo was already opened. That's kind of a tricky time to trade. There's not always that much volume, and you can get a lot of jumping around. So I would skip this one for news trading. But then the following, and then same thing for the New Zealand financial data at 8 p.m. So I would skip that and then wait for the next day. On Wednesday morning, we had U.S. preliminary GDP and ADP unemployment claims. So we had both at 8:30, and then this one is huge, the U.S. core PCE, okay? That is what the Fed, the U.S. central bank's favorite indicator of inflation is, the PCE report. So on Wednesday, we were paying attention to the 8:30 report and the 10 a.m. report. Later on in the day at 2 p.m., I'm typically not trading on meeting minutes, but if you're in index trades, that can typically move the Dow as well as the other indexes, the S&P, quite a bit, because sometimes there are some hidden gems that pop out when they actually publish the meeting minutes. We know that when the Fed actually speaks before Congress, and when Powell, the chairman of the Fed, gives his press conference, that's always a super high volatility time to trade, and I would not trade right around those. That is just way too volatile even for me. Thursday was a quiet day. It was the U.S. Thanksgiving holiday or a bank holiday, so no news reports tradable that day. But then on Friday, we had the Canadian GDP right at 8:30, and that was very tradable. Now, what is the goal of trading these news reports? Okay, we can identify which reports we want to trade, but then what do we trade? Okay, from experience, in these particular trades are going to be the best movers. Okay, when I'm trading the dollar, I like to trade the dollar yen. Okay, great movement. Lots of potential for lots of pips on this movement. If anybody follows, those of you that follow my channel, know that the yen pairs can sometimes give us hundreds of pips in a particular trade. So I like to trade the dollar yen, and I'll be releasing these trades with the pairs that I'm going to be trading and what to look out for. So on Tuesday, for this 10 a.m. report of the U.S. dollar, this is the pair that I traded. And then on Wednesday, I watched both of these reports, again on the dollar yen. And then on Friday, of course, the dollar yen is not going to be as valuable as trading the dollar Canadian dollar. So that's what we traded on Friday. Okay. And by the way, if you guys have any questions, throw it into the chat and I will see it. I'll be happy to jump in and let you know. Okay. So here's what I actually put in the Telegram channel over the weekend that I would be looking at these to trade. So again, Tuesday on the 26th, the pair, the report, the time, and the pair. Wednesday, the two reports, the time, and the pair. And Friday, the time and the pair. Now let's see how they played out. So the first one was the dollar yen, and that was at 10 a.m. on Tuesday the 26th. So let me go ahead and start this. And as you can see, we are coming right into the 10 a.m. period, and we are already up at the upper limits. So potentially we're looking for shorts. We didn't quite get to be an outside bar yet, okay? Price really started running up earlier in the day at around 9 a.m., okay? I wasn't following this pair. I was waiting for the news report, but this certainly was a beautiful trade all the way up. So what happened with this? The news report comes out, and we're going to see exactly what kind of movement we are hopefully looking for. And as you can see, with the news report, it spiked down a little bit. And if we move all the way up to the edge of this supply zone, okay, giving us outside bars, then we've got a good short trade setting up. Now you can see over here, we're already overbought, okay? We've been in this long channel over here, so we're going to be looking for the opportunity for a reversal trade. And sure enough, it kept going up. And we're just going to patiently wait. We're almost there. Okay, and now we haven't quite gotten to the outside bar on the envelope. But we're pretty close, and after being overbought several times and now starting to flip over and starting to move down, to me, this looks like a reasonable time to get in. We didn't quite reach it all the way up, but we had this nice swing, and we're due to swing back down. Now we're getting a signal, so that's the time to enter in. And as you can see, I jumped into this trade, and I will leave my first target right at the midline. And then in looking here, as we're starting to move down, looks like a great possibility of even passing and hitting that next standard deviation channel. So you saw that I moved that target down. And then we took a little bit of heat coming back up, but my stop is up here after the second zone, always outside of the envelope. And now we're starting to see some movement down, and we're in the money. And for me, once we're in the money, I start to think about moving my stop down and getting a little closer. And we're already a few $100 into it with very little risk. Okay, our initial risk was not that far. And you can see how the supply and demand zones develop. If this demand zone really holds tight, we might push it back up. So I'm going to go right to my break even. I hate to leave any money on the table, but in this case, because we kind of were in the middle a little bit, didn't want to risk it. And we had a little move up, and then right away we swung back down. So as you can see, we were all the way up here to start out, and we had a little bit of movement, but we are working our way all the way back down. It's a little sideways, but even so, we're in good shape, and we're about to hit that first target. Not quite there. And there we go. We hit our first target. Now, if we break through this demand zone exactly as we did, I'm going to move my second target all the way down because that's a lot of momentum that just built up. And as you can see, I'm now trailing my stop. And one of the ways I like to trail is just by following the linear regression moving average, which is this white line right here. So with every 5-minute candle, I'm tugging it down a little bit, just a few pips back to maximize profits. And you can see that I'm trailing that down. And as soon as we get a reversal, if it's close to this linear regression moving average, then I know that it's on its way back up, okay? So as you can see, I'm manually pulling it down, and we're going to be out of it pretty soon. I'm holding my stop at this point right here, hoping that we get a reversal. Didn't see it, and we're out, okay? So this was a few $100, but you can see we had that nice move from one edge of the zone all the way down to the other side. Now, what did we actually wind up with on this? Let's see. We entered right over here. There's my entry mark. And our first target was right here for about 30 pips. And then second target was a little bit better for almost 40 pips, almost 70 pips or so, knowing that this was going to be a news event that was going to move the market. I frankly, you saw that I didn't pull up the news to see which way it went because we already knew the direction of the trade that we wanted to take. I was at the top of the channel. I was looking to get an entry signal to move to the other side of the channel. If I was already at the other side of the channel, right around the news event, I was looking for any indication to move to the upper end of the channel. All right, let's look at another one. So now, on Tuesday, let's see, hold on. There we go. On Wednesday, remember we said that we had two events. So we had US GDP at 8:30 in the morning, and then the US PCE at 10 a.m., okay? A GDP, gross national product, consumer expenditures, both highly significant US inflation results. Right now, it's 7:30 when I'm looking at the chart. We've already been moving down, moving down, moving down. Why? This is the US dollar yen, okay? So if it's moving down, that means the dollar is getting weaker. So post-inflation, all of the geopolitical events, the dollar has been kind of weakening a little bit, but we don't care. What we're looking at is at a point in time, close to the time of the news event, are we at one edge of the channel or the other edge of the channel, and we want to ride it in the opposite direction. So right now at 7:30, let's go ahead and start the playback and see where we're at. And again, we're on the 5-minute chart, all those indicators that I mentioned before. And as we come into 7:30 to 8:30, we want to see whether or not there's already a move by the big banks in one direction or another. So as you can see, perhaps we're already getting a push down to this edge, or we might get a push up to this edge. We're right in the middle, so we're just watching a little bit earlier, potentially, than the first trade to see what goes in. Let me just move it ahead a little bit. So now we have worked our way up. We're pretty much outside of the standard deviation channels, not quite outside of the envelope, which has gone kind of flat, which is pretty appropriate for what we're seeing. But now we're starting to move up. So we're thinking perhaps if we get up to this area, we're going to have a nice short setup, okay? So we had a nice move down. We're moving back up, moving back up, moving back up. Are we going to crater right back down? We're oversold. Excuse me, we're overbought. We were up in the channel, we're coming down. And now we're getting into the news release. Let's see. I think we're about to hit the news candle. Not enough to jump in before. That looks like that was the news candle, that big jump. And if that candle closes, and it didn't close down, started to move back up, so we still have the potential to reach back up here. Okay, then we had a nice strong candle down, and that closed with a movement back down. So we'll jump in. Not my favorite spot to jump in, but we reached the extreme, and now let's see if we can't ride it down to this opposite extreme. So we watched this news event running into 8:30, and then right at 8:30, we were close enough to the top, and a huge momentum candle down where we jumped in. Looking to take a quick profit right here. We're too close to midline to try to grab this one. Let's shoot for the next, and then potentially further. And we're moving in the right direction, and we want to see this continue down in the lower channel and move into oversold territory. Hold on, we jumped the gun there. Let's see. And we're about to have a nice move down and take out our target. There we go. So we took that target out with one nice candle. And hate to give anything back, so I'm back at break even. And that was it. And we wound up getting out at break even. So not a huge amount of movement on this one, but the news is what it is. We watched this release, and we saw we were able to grab a little bit just by moving from one end to the other. Now, let's take a look. Hold on, am I in the right? No. Okay, now at the 10 a.m. spot, okay, unfortunately, for some reason, I wasn't able to get the video on that one. I think there was a glitch when I was recording it, okay, but if you'll see, here was that 8:30 period. We worked our way all the way down, okay? At 9:30, when the New York markets opened, we were all the way down. Beautiful outside bar, and we moved all the way up, okay? In anticipation of the 10 o'clock release, which came out right over here, we had this beautiful outside bar. We had our signal. We were outside the envelope and the standard deviation channel, got in this trade, and rode it all the way back down until we were outside again in just 30 minutes and had a potentially two more trades, okay? So on these days, when you have GDP and PCE together, you can watch just this one pair and trade in both directions, up and down. You don't need to try to predict where the currency is going to wind up at the end of the day, or how long it's going to stay up or stay down. Again, you're just riding the high probability of the movement from one outside bar to the other. And let's see, we had on Friday the Canadian GDP. So let's see how that played out. Yeah, I've got the video on this one. So going into this trade, again, it's about 7:30, 8 o'clock. The report's coming out at 8:30, so I'm going to be watching it. And at a glance, I already know I'm going to be looking for a short on this one. We're already at this outside channel. I wouldn't jump in on this trade yet because we are not, as you can see, below the linear regression moving average. I want to watch for that reversal bar. If that bar closes below, then I'm in, okay? And my stop was going to be right over here. But it might continue up. This signal might disappear. We might get another signal over here. It could go up to here. I've seen huge moves before we wind up coming all the way down. So let's go ahead and start the playback. Okay. One sec. There we go. So as you can see, we are moving up a little bit. And we might wind up with a couple more long candles before, or the reversal. That's what we're waiting to see. We're already overbought, and now we have a little reversal candle, but not enough. I want that candle to close on the opposite end of the linear regression moving average, and then I'm going in, I'm selling at market. You can see my mouse right over here, I'm waiting to enter for that close, and I didn't get it. Continued back up. It could go all the way back up here, and then I'd have a huge stop. Okay, but now with the clock almost closing on that 5 minute, I'm in, and I'm going to adjust my targets. In this case, we're pretty close to the midline, so I'm going to go just inside of that next standard deviation line. Okay, pulling my stop down a little bit. And as you can see, I have my second target all the way down here by this demand zone, okay? Because it may act as a magnet, okay? We had 1 touch, 2 touches. We might get a 3rd touch all the way down here. So I want to try to capture all of that. Plenty of room for this to continue to go down. Plenty of time for it to get down into this channel. So it looks like we're about to hit our first target. This was a really nice trade. And as you can see, I kind of pulled up. I got a little shy with this lower target when I saw this flatten out a little bit, okay? So I do watch both of these indicators down here. If this starts to head down a little bit, I might get a greater confidence that it might come further down. But right now, I'm kind of iffy on it. We got our first target. Move my stop down to break even. Okay, let's get it a little bit further into that zone. We are approaching the channel, so we might be able to get quite a bit more on it. And in this case, I kind of jumped the trail a little bit here because we already wound up getting overbought, and I didn't want to lose out on anything. So we got stopped out at break even on this. Not bad, but that is why I usually try to put my first target either right at the midline or at the latest, the next zone, or if there are any supply-demand zones in between. Okay, so next, let's see. Oh, hold on. There we go. Now, what about this week that we're in? So these are the trades that I've been watching, okay? These were yesterday's trades. I'll get those prepared and show you these on Thursday. I should be able to get this one as well. And then Friday we'll show this one next week on Tuesday. But let me also give you a little bit of a taste of what I watched just with live charts, and I'm still watching. So if you see on the main screen, the trades that I'm in, the open trades, I'm in 4 shorts, okay? So let's go ahead and show that to you. Okay, so for example, the first one, the Australian dollar, US dollar, as you can see, we had a nice outside bar right here, okay? There was not necessarily any particular news. I was just watching and scanning every 30 minutes. These are 30-minute charts looking for outside bars on either the long side or the short side. In this case, I had a close right on the inside over here, and we had a nice move all the way down, okay? I'm gonna start putting out these signals as I see them, okay? Watch the Australian dollar, US dollar for a potential short, okay? And then you can take the trades when you get to them and the candles are there and look for your targets and choose your targets and your stops appropriately. Next one that I looked at was the Canadian dollar yen, okay? So in this case, we wicked the outside bar, okay? Didn't quite have it go all the way outside, but that was a beautiful swing. Just the kind of parabolic swing we're looking at, okay, as we started to get in. All right, I was here in front of it right about 6:30, and this was a great spot to get in. And as you can see, we were at the outside channel all the way down, okay? Next one was the pound yen. Where'd you go? Okay, in this case, same thing, right about 6:37 a.m. And so, by the way, you can see this is one chart with 28 pairs that every 30 minutes I'm scrolling through to see movement. And I'll keep a little a notepad on the side for what I'm watching for when I'm waiting for my candle to my reversal candle to close and potentially get in. So at 7 a.m., if we got in right over here, we were able to get out right down here. Okay, nice, beautiful move before it moved back up. Okay, so you can see over and over again, these parabolic moves pay off. Last one, the Kiwi dollar. Let's see where that is. Okay, in this case, a couple of candles down. We didn't quite get in until pretty close to the midline, but still made it to the opposite edge of the channel. Okay, so don't try to be greedy and go all the way down if you can't. If you're at the opposite edge of the Naderai-Watson channel, take some off the table and go to break even, and that works beautifully. Okay. So that is a nice summary of what I'm going to be adding to the channel for everybody that's in my group and for these live sessions that we're doing here. If you have any questions about for me directly, you can. Oh, by the way, for those of you that are already in my group, this is what the Telegram signals look like. This is what Telegram looks like. This is where I post everything live, so you can see it on your phone or on your computer. And I'll be adding these new signals to that group as well, starting either by the end of this week or next week. And as I said, for any of you that have any questions, feel free to email me directly. I'll be more than happy to give you some more details. If you've been trying to take some trades and you're not sure where you got in, where you got out, grab a screenshot, include it in the email so that I can understand what you're pointing out, and I'll give you some advice on it. And for any information about joining the group, just head over to strategicdaytraders.com. For me, I always keep my Financial Juice website up on another monitor, so I'm watching the news as it's going. And you can even turn on the news reporting if you join and get a report of the news releases as it comes out. But I'm so used to glancing over at the results as they're coming that I got it right next to me, and that works beautifully. Okay, guys, so that's a wrap. I'm sure we'll have a recording to send back out for those of you that were not able to make it or when we started or came in halfway. Then I'll be happy to you'll be able to come back in and look at the recording. And if there are any other questions, just pop them in there. Otherwise, we'll do this again on Thursday with the next couple days of trades and show you what I took on the day on Thursday. And hopefully you'll start to get some more experience with this. If you have any questions on setting up your platforms or the indicators, like I said, reach out to me and we'll get you going and start taking some of these trades as well. Good trading, everybody, and we will see